Question 1. Title insurance coverage. A standard title insurance policy typically excludes certain risks. Which of the following is generally excluded from coverage under a standard title insurance policy? A. Unrecorded liens by the insured's own spouse. B. Encroachments by neighboring properties. C. Matters affecting title that were known to the insured at the time of policy issuance. D. Forgery in documents recorded prior to the policy date. Answer: C. Matters affecting title that were known to the insured at the time of policy issuance. Explanation: a standard title insurance policy usually provides coverage against risks that are not known to the insured at the time of policy issuance. It excludes risks that the insured was aware of before the policy was issued, such as encroachments by neighboring properties and unrecorded liens by the insured's own spouse, which are typically addressed through endorsements or extended coverage. Forgery in documents recorded before the policy date would generally be covered by an extended coverage policy or specific endorsements. Question 2. Title search process. When conducting a title search, which of the following is not a primary public record typically examine? A. Deeds. B. Judgments. C. Personal letters. D. Mortgages. Answer: C. Personal letters. Explanation: title searches involve reviewing public records that affect the titled properties such as deeds, judgments, and mortgages. Personal letters are not considered public records and thus are not relevant to title searches. Judgments, especially those related to liens, can impact title and are crucial to examine during a title search. Question 3. Scenario-based. MS. Johnson recently purchased a property and obtained title insurance. During her title search, she discovered that an easement for a utility line runs through part of her property, which was not disclosed before purchase. What is the most appropriate action? MS. Johnson should take A. File a claim with her title insurance company for compensation for the loss in property value. B. Seek legal advice to determine if the easement can be contested or altered. C. Accept the easement and negotiate a reduced purchase price with the seller. D. Report the issue to the local government to request removal of the easement. Answer: A. File a claim with her title insurance company for compensation for the loss in property value. Explanation: title insurance is designed to protect against defects or issues not disclosed before the purchase, such as undisclosed easements. MS. Johnson should file a claim with her title insurance company to address the issue. Seeking legal advice, option B, may be useful for understanding her rights, but filing a claim is the direct action to address the coverage aspect. Negotiating a reduced purchase price, option C, is not applicable after the purchase and reporting to the local government. Option D does not resolve the insurance coverage issue. Question 4. Title insurance policies. Which of the following statements accurately describes a lender's policy in title insurance? A. It provides coverage for the property owner against title defects that arise after the purchase. B. It insures the lender against losses due to defects in the title that were not discovered during the title search. C. It covers both the lender and the property owner against all title defects. D. It provides coverage specifically for easements and restrictive covenants affecting the property. Answer: B. It insures the lender against losses due to defects in the title that were not discovered during the title search. Explanation: a lender's policy is designed to protect the lender's financial interest in the property against title defects that could affect the lender's security interest. It does not cover the property owner's interests, which are covered by an owner's policy. Coverage includes protection against losses from defects not discovered in the title search, but it does not cover easements or restrictive covenants unless specifically included. Question 5. Title defects. Which of the following is considered a hidden defect that may affect the title to property? A. A mortgage lien recorded in the public records. B. A previously undisclosed prior owner's divorce settlement affecting property rights. C. A valid and recorded easement for access to a neighboring property. D. A judgment lien recorded against the previous owner. Answer: B. A previously undisclosed prior owner's divorce settlement affecting property rights. Explanation: hidden defects are issues affecting the title that are not easily discovered through a standard title search. A divorce settlement affecting property rights of a prior owner is not typically recorded and therefore may be considered a hidden defect. Recorded liens and easements, options A, C, and D, are usually discovered through a title search and are not classified as hidden defects. Question 6. Closing and settlement procedures. During a property closing, which document is used to detail the financial transactions between the buyer and seller? A. The title insurance policy. B. The HUD-1 settlement statement. C. The mortgage note. D. The property deed. Answer: B. The HUD-1 settlement statement. Explanation: the HUD-1 settlement statement provides a detailed account of all financial transactions involved in the closing of a property purchase, including disbursements and adjustments. The title insurance policy, option A, provides coverage details. The mortgage note, option C, outlines the loan terms, and the property deed, option D, transfers ownership but does not detail financial transactions. Question 7. Risk management. In title insurance, what is a common strategy for managing risk associated with claims? A. Regularly updating the property's title report with every transaction. B. Limiting coverage to only title defects discovered during the initial search. C. Requiring all insured parties to purchase separate policies for each property transaction. D. Implementing comprehensive fraud detection measures and review processes. Answer: D. Implementing comprehensive fraud detection measures and review processes. Explanation: to manage risk, title insurance companies implement comprehensive fraud detection measures and review processes to prevent and address fraudulent activities and title defects. Regular updates, option A, and limited coverage, option B, do not effectively manage risks associated with claims and requiring separate policies, option C, is impractical. Question 8. Title insurance products. Which of the following is an example of an ancillary service offered in conjunction with title insurance? A. Title abstracting. B. Title policy underwriting. C. Property survey. D. Title claim adjustment. Answer: C. Property survey. Explanation: a property survey is an ancillary service that complements title insurance by providing an accurate depiction of property boundaries and potential issues such as encroachments. Title abstracting, option A, and title policy underwriting, option B, are integral parts of title insurance, while title claim adjustment, option D, relates to handling claims rather than an ancillary service. Question 9. Legal framework. Under New York state law, which entity regulates title insurance companies? A. New York State Bar Association. B. New York State Insurance Department. C. New York State Department of Real Estate. D. New York State Department of Financial Services. Answer: B. New York State Insurance Department. Explanation: the New York State Insurance Department, now part of the Department of Financial Services, regulates title insurance companies in New York. The New York State Bar Association, option A, and Department of Real Estate, option C, do not regulate title insurance, and while the Department of Financial Services, option D, oversees insurance, the direct regulation of title insurance falls under the Insurance Department's purview. Question 10. Ethical standards. Which of the following best describes a conflict of interest in the context of title insurance professionals? A. A title insurance agent receiving a bonus for referring clients to a specific attorney. B. A title insurance company providing coverage for a property with known defects. C. A title insurance agent failing to disclose the cost of title insurance to the client. D. A title insurance company issuing policies without conducting a title search. Answer: A. A title insurance agent receiving a bonus for referring clients to a specific attorney. Explanation: a conflict of interest arises when a title insurance agent's personal interests, such as receiving a bonus, could influence their professional judgment or actions. Providing coverage for known defects, option B, or failing to disclose costs, option C, are unethical practices but not necessarily conflicts of interest. Issuing policies without a title search, option D, is a procedural violation rather than a conflict of interest. Question 11. Title search. When examining a property's chain of title, what is the primary purpose of verifying the chain? A. To determine the current market value of the property. B. To confirm that all previous owners had clear and marketable title. C. To assess the physical condition of the property. D. To evaluate the current zoning laws affecting the property. Answer: B. To confirm that all previous owners had clear and marketable title. Explanation: verifying the chain of title is crucial to ensuring that all prior owners had a clear and marketable title, meaning there were no defects or issues that could affect the current owner's rights. Determining market value, option A, assessing physical condition, option C, and evaluating zoning laws, option D, are important but not directly related to the chain of title. Question 12. Title insurance policy endorsements. Which endorsement typically provides coverage for a property's title issues not included in the standard policy, such as zoning violations? A. ALTA 9 endorsement. B. ALTA 4 endorsement. C. ALTA 8 endorsement. D. ALTA 6 endorsement. Answer A. ALT 8-9 endorsement. Explanation. The ALT 8-9 endorsement provides extended coverage for issues not typically covered by a standard policy, including certain zoning violations. The ALT A4 endorsement, option B, is for restrictions, covenants, and conditions. The ALT A8 endorsement, option C, is for environmental issues, and the ALT A6 endorsement, option D, is for encroachments. Question 13. Title insurance exclusions. Which of the following is typically excluded from title insurance coverage? A. Unrecorded property tax liens. B. Recorded easements disclosed in public records. C. Existing zoning regulations affecting the property. D. Errors in the title search conducted by the title company. Answer A. Unrecorded property tax liens. Explanation. Unrecorded property tax liens are generally excluded from title insurance coverage because they are not discoverable through a standard title search. Recorded easements, option B, in existing zoning regulations, option C, are typically addressed in the policy, and errors in the title search, option D, are covered under the title insurance company's responsibility. Question 14. Handling title insurance claims. If a title insurance claim involves a dispute over an undisclosed lien, what is the title insurance company's primary responsibility? A. To negotiate a settlement between the insured and the lien holder. B. To cover the financial loss to the insured resulting from the lien. C. To assist the insured in removing the lien from the public record. D. To issue a refund for the premium paid for the insurance policy. Answer B. To cover the financial loss to the insured resulting from the lien. Explanation. The primary responsibility of the title insurance company in the event of a claim is to cover the financial loss incurred by the insured due to the undisclosed lien. Negotiating settlements, option A, and removing the lien, option C, are not primary responsibilities, and issuing a refund, option D, does not address the financial loss from the lien. Question 15. Professional conduct. Which action is considered a violation of ethical standards for title insurance professionals? A. Providing accurate information about the title to the client. B. Disclosing all known defects and encumbrances to the client. C. Accepting gifts or referrals from related parties without disclosure. D. Ensuring compliance with all relevant state and federal regulations. Answer. C. Accepting gifts or referrals from related parties without disclosure. Explanation. Accepting gifts or referrals from related parties without disclosure is a violation of ethical standards as it can lead to conflicts of interest. Providing accurate information, option A, disclosing defects, option B, and ensuring regulatory compliance, option D, are ethical practices and required behaviors. Question 16. Title insurance and fraud. What is a common method for title insurance companies to detect fraudulent activity? A. Reviewing the property's market value appraisal. B. Conducting background checks on all parties involved in the transaction. C. Verifying the authenticity of documents and signatures. D. Monitoring changes in local real estate market conditions. Answer. C. Verifying the authenticity of documents and signatures. Explanation. Title insurance companies often detect fraudulent activity by verifying the authenticity of documents and signatures involved in the transaction, reviewing appraisals, option A, conducting background checks, option B, and monitoring market conditions, option D, are useful but not directly related to fraud detection. Question 17. Property surveys. Why might a property survey be important for title insurance? A. To verify the property's historical ownership. B. To identify physical encroachments and boundary issues. C. To assess the property's tax liability. D. To provide a detailed history of past title claims. Answer. B. To identify physical encroachments and boundary issues. Explanation. The property survey is essential for identifying physical encroachments and boundary issues which can impact the title. Verifying historical ownership, option A. Assessing tax liability, option C, and detailing past claims, option D, are not the primary purposes of a property survey. Question 18. Title insurance policy types. Which type of title insurance policy is typically issued to protect the property owner's interests? A. Lender's policy. B. Owner's policy. C. Builder's policy. D. Investor's policy. Answer: B. Owner's policy. Explanation: the owner's policy is specifically issued to protect the property owner's interests against title defects. The lender's policy, option A, protects the lender's interests, while builders' and investors' policies, options C and D, are not standard terms in title insurance. Question 19. Title insurance regulation. Which New York State Department oversees compliance and regulatory issues related to title insurance? A. New York State Department of Financial Services. B. New York State Department of Taxation and Finance. C. New York State Department of State. D. New York State Department of Public Service. Answer: A. New York State Department of Financial Services. Explanation: the New York State Department of Financial Services oversees compliance and regulatory issues related to title insurance. The other departments, options B, C, and D, handle different aspects of state regulation and are not involved in title insurance oversight. Question 20. Title insurance and marketability. Which factor does NOT typically affect the marketability of title to a property? A. The presence of an easement on the property. B. The financial stability of the property owner. C. The existence of a recorded lien against the property. D. The results of a title search indicating no defects. Answer: B. The financial stability of the property owner. Explanation: marketability of title is concerned with legal and recorded aspects of the property, such as easements, option A, recorded liens, option C, and the results of a title search, option D. The financial stability of the property owner, option B, does not typically impact the title's marketability. Question 21. Title defects. Which of the following is a potential defect that could be uncovered during a title search? A. A newly constructed building on the property. B. An unrecorded mechanics lien for unpaid contractor work. C. An updated property tax assessment. D. A recent change in local zoning laws. Answer: B. An unrecorded mechanics lien for unpaid contractor work. Explanation: an unrecorded mechanics lien is a potential defect that may not be discovered through a standard title search, potentially affecting the property's title. Newly constructed buildings, option A, and updated tax assessments, option C, are not defects but changes or updates to the property. Changes in zoning laws, option D, may affect the property but are not typically considered title defects. Question 22. Coverage exclusions. Which of the following is generally NOT covered under a standard title insurance policy? A. Claims arising from fraud or forgery. B. Zoning restrictions affecting property use. C. Unrecorded easements affecting the property. D. Defects in title due to errors in the title search. Answer: C. Unrecorded easements affecting the property. Explanation: unrecorded easements are typically excluded from standard title insurance policies because they are not discoverable through its standard title search. Fraud or forgery, option A. Zoning restrictions, option B. And errors in the title search, option D, can be covered under specific circumstances or endorsements. Question 23. Title examination procedures. When conducting a title examination, what is the primary goal of reviewing public records? A. To assess the market value of the property. B. To confirm that all recorded liens and encumbrances are accounted for. C. To determine the current condition of the property's structures. D. To verify the property's historical significance. Answer: B. To confirm that all recorded liens and encumbrances are accounted for. Explanation: reviewing public records during a title examination is primarily to confirm that all recorded liens and encumbrances affecting the property are accounted for and evaluated. Market value, option A, property condition, option C, and historical significance, option D, are not the primary goals of this review. Question 24. Title insurance claims process. If a claim is made under a title insurance policy, what is the first step the title insurance company should take? A. Deny the claim and offer a refund of the premium. B. Investigate the claim to determine the validity and extent of coverage. C. Immediately pay out the full amount of the claim. D. Notify the insured of the claim's denial without further investigation. Answer: B. Investigate the claim to determine the validity and extent of coverage. Explanation: the title insurance company's first step is to investigate the claim to determine its validity and the extent of coverage under the policy. Denying the claim, option A, paying out the full amount without investigation, option C, or notifying denial without investigation, option D, are not appropriate initial steps. Question 25. Title insurance and risk management. What is a key method for managing risk in title insurance? A. Limiting insurance coverage to only property values. B. Regularly updating title insurance policies for each property transaction. C. Performing thorough due diligence and title searches before issuing policies. D. Reducing the number of insured properties to minimize potential claims. Answer: C. Performing thorough due diligence and title searches before issuing policies. Explanation: thorough due diligence and title searches are key methods for managing risk in title insurance, as they help identify potential issues before policies are issued. Limiting coverage, option A, updating policies for each transaction, option B, and reducing the number of insured properties, option D, are not effective risk management strategies. Question 26. Title insurance products. Which of the following services is typically included with a title insurance policy? A. Property appraisals. B. Legal consultation regarding property disputes. C. Title searches and examinations. D. Property management services. Answer: C. Title searches and examinations. Explanation: title searches and examinations are typically included with a title insurance policy, as they are essential for identifying potential issues with the title before issuance. Property appraisals, option A. Legal consultation, option B, and property management services, option D, are separate services not usually included with title insurance. Question 27. Legal and regulatory framework. Under New York State regulations, which document must be filed with the New York State Insurance Department regarding title insurance policies? A. The title insurance policy form. B. The settlement statement. C. The title search report. D. The property deed. Answer: A. The title insurance policy form. Explanation: the title insurance policy form must be filed with the New York State Insurance Department to comply with regulations. The settlement statement, option B, title search report, option C, and property deed, option D, are related documents but not required for filing with the Insurance Department. Question 28. Ethical practices. Which practice is considered ethical for a title insurance professional? A. Accepting commissions for recommending specific contractors to clients. B. Fully disclosing all known conflicts of interest to clients. C. Withholding information about minor title defects to avoid client concerns. D. Prioritizing personal financial gain over client interests. Answer: B. Fully disclosing all known conflicts of interest to clients. Explanation: ethically, title insurance professionals must fully disclose all known conflicts of interest to clients. Accepting commissions, option A, and prioritizing personal gain, option D, are unethical practices, and withholding information about defects, option C, is not considered ethical. Question 29. Problem solving and critical thinking. In a scenario where a client discovers an undisclosed easement after closing, what should be the title insurance company's immediate action? A. Request the client to cover the cost of the easement issue. B. Review the claim and determine if the easement affects the coverage. C. Deny the claim due to the policy's coverage limits. D. Advise the client to seek legal resolution independently. Answer: B. Review the claim and determine if the easement affects the coverage. Explanation: the title insurance company should review the claim to determine if the undisclosed easement affects the coverage provided by the policy. Requesting the client to cover costs, option A, denying the claim, option C, or advising legal resolution independently, option D, are not appropriate initial actions. Question 30. Industry trends. Which of the following is a recent trend affecting the title insurance industry? A. Increased use of digital technology for title searches and policy management. B. Decreased demand for title insurance due to market saturation. C. Reduction in regulations governing title insurance practices. D. A shift towards manual processing of title documents. Answer: A. Increased use of digital technology for title searches and policy management. Explanation: the increased use of digital technology for title searches and policy management is a significant trend affecting the title insurance industry, enhancing efficiency and accuracy. Decreased demand, option B. Reduced regulations, option C, and a shift to manual processing, option D, are not current trends in the industry.